Good afternoon, everyone. Just before the American Open on the 2nd of February, Wednesday the 2nd of February, the push-up on the S&P has been excellent over the last couple of days. And as you can see, the 4,500 level, which I felt was very important, was broken yesterday. So it's starting to look more like that we're starting to move into a new trend, as opposed to this being a dead cat bounce, a rally in a bear market. Let's see. The advice on VectorVest is still caution, and still only the shortest term measure of the trend has turned up. I'm sure many of you are getting quite eager to get on board, and certainly the most aggressive could have put their toes into the market already. I haven't done anything, although I am long the S&P, and I'll show you the chart now. I'm long since just after the VectorVest Q&A on Monday afternoon, and it wasn't really rocket science, but somewhere around there I got long. If I put up the hourly chart, you can see the setup much more clearly. And it's one of my, I know I'm a one-trick wonder, I know, but as you can see, there's resistance there, and it goes up and then it comes back again. It's not a classic spring because it made a new high here, but then we got a couple of bars of accumulation there. You see the tails in those bars, always a good sign, and away it went. And I've held that position. Yesterday afternoon, they did their best to stop everybody out, and anybody who'd stops underneath these lows, those were the obvious stops. And as you can see, the market went down and nailed them. The best trades occur after the majority of the investment community have been, in fact, taken out. So I've held the position since here, and it's still above that 20-day, 20 times 4-hour moving average, so I'll hold it. So what I wanted to actually look at very quickly was an illustration of a swing trade, and it's a swing trade in a company called CF Industries, which is in an industry group that's very interesting, fertilizers, and there's a shortage of fertilizers around the world. I was reading all about that in The Economist at the weekend. So it's trading at 74. VectorVest believes with 96. That's a darn good start, up a huge amount yesterday. The RV is 1.48. Which means that we believe is going to outperform a corporate bond by 48%. That's excellent. But the relative safety is right on its knees, saying that the financials of this company have been up and down, in and out over the last 5 or 6 years. So it looks okay for a swing trade. It certainly would be a very, very long way for a share that you'd want to put into your worry-free portfolio. RT is great, the VST is great, the CI couldn't be better, and a growth rate at 32% next year. The share is cheap. The forward price to earnings ratio is 8.25. So the reason I point this out is it's just an outstanding example of a swing trade. And we'll see. I'm not in the share because I haven't bought in yet, but I was actually ruing that I hadn't. As you can see, there's my 3 moving averages. That's the bow tie, the 21, the 55, and the 89. They all go through each other just about there. As I keep saying, especially to the VectorVest people, you get very lucky when you're trading in sync with this momentum. It pulls back in what technicians would refer to as a classic flag pattern. And then it broke out of the flag, and as you can see, it broke out of the flag on rising volume. That's really good. And then it goes sideways in this multiple inside day on falling volume, and that's pretty much saying that there's no sellers in there. And then it broke out of the inside pattern on rising volume. Now, as you can see, if I put on the medium-term measure of the overall market, that's still on a down signal, and the longest-term measure of the overall market's been in a down signal since here in November. So this is a share that's done very well as the general market has been falling. That bodes well for the future, folks. there's the primary wave, and the primary wave's a noisy beast, but the primary wave has been up for the last couple of days. So it's opened here, and it's opened down a little bit, and I might be tempted to buy a spread bet in it if it comes back and hits that high at 72.50. Okay, so let's see how that goes. It's at 73.59 now, but I just pointed out nobody knows what's going to happen next. Nobody, unless you are in fact looking at some small little stock where you've got some juicy inside information. It's what the novelist John le Carré would have called pillow talk. So nobody knows what's going to happen next, folks. All we can do is line up the probabilities, and this looks very good. The only thing in doubt as to whether this run-up in markets that we've seen is that the start of a new trend, or are we still in a bear market rally? We've a lot of data to come out this week. The ADP should have come out this afternoon. We've got non-farm payrolls coming on Friday. A lot of data out of the US. That looks like a particularly good setup to me, and I really like the volume picture here. Assuming the general market can keep going, that looks as if that's going to keep going. I hope you found this useful. Thanks very much.